Yes. Turn this down. Sunday morning, man. Welcome to the Money Flow Sunday service. We change up the pace. Open with my other song. Hope everybody's doing well. Move my coffee here. Let me kill the comments on Instagram. Great week in the markets. Markets look good, man. Let's pin that. Markets look good, man. Get people coming and going. All right, man. YouTube looks good. System check. 1, 2, 3. Market is chaos. Let me pull this up. Okay, we got good sound. There we go. I don't have my 3-4 monitors here, so I can't see. It's always a trip too, because YouTube is delayed, so you can't listen to yourself. Obviously, it's hard to listen to yourself talk in 30-second delay while continuing to talk and teach a class. So so everybody that like comments, a lot of times I can't read them because you can't read and talk at the same time. So, all right, let me go ahead and let me turn off commenting, because people on Instagram like to say the dumbest things. So let's turn that off so as not to ruin church. Trader Church, man, I started doing this because you need a place. If you want to be a successful trader, and investing is trading. I mean, we use that word synonymous, right? Or it kind of goes back and forth, but there's trading, there's investing, there's different kinds, and we want, I think people use that interchangeably. Just being a trader, and it's good to be a trader even inside of your buy and holds in it, because at times you need to know a good time. When's a good time to buy a stock? When's a good time? If you ask what a ticker is, you're in the wrong. This is not what we're doing. That doesn't matter. Okay. We don't need to know what a ticker is. You got enough tickers. There's like 5,000 tickers in the world. What this is a movement of price. If you have my new ebook, on page 8 talks about chaos to cash. Success is always organized chaos. The world and the universe are perfectly balanced. The planets never collide with each other. The roots of the trees are always just long enough to stabilize the trunk. Somehow you seem to just get through the day. And all those problems you have, somehow they just keep working out. You wanted a girl and you got married. You wanted a man and you got a boyfriend. The universe provides for you. You wanted a car and you got a car. You just didn't ask for bigger or better. Fact is, the nature has a very crafty survival system. It's a system that eliminates the weak from gaining too much power and authority. To protect itself, nature purges itself of anything that can't handle the pressure, people included. Nature does this to make sure that the strong will be around to assist her in keeping everything in order. Like causes produce like of results. It's nature's predictive model. Nature's predictive model. Meaning you walk out on your porch and you look and it looks kind of cloudy. Looks like rain, but you're not a meteorologist. How did you do that? Well, stock market's very similar. And there's people that'll tell you can't pick bottoms. I disagree. You can pick all of them. So this is a blank chart right here. There's no indicators, no moving averages, no lines, just a chart, just a naked chart, just a raw organic chart. Each one of these bars on here is one day, and it doesn't matter if you display that as a candlestick or a bar. I like bars. And that tick you see to the left is where it opened, and the tick you see to the right is where it closed. And if that open is to the left and it's higher, To the right, you're going to get a black candle or a black bar, especially if it's above the previous bar. If the whole thing is below it, you can actually have a red. See here? Right here at the bottom, we had a red bar. And that red bar, even though the close was higher than the open, it was below the previous candle. And so the color is red. You could make it blue or purple, but we tend to use black. Black means the open, where the close was above this one. And then, of course, there's the open and then the close. And it's higher. Even though the day moved up, the overall candle was down. So you had a red candle, red candle, red candle, red candle, red candle. That's one entire week in the stock market where price went down. And we see that. And what we're trying to do is we look at candles. If we're trying to use charts, what charts do, in my opinion, estimation, is not some predictive model, although that's kind of the way people use it. It's more of explain to me what's going on model. And so what I'm looking to do is I'm trying to build boxes. It's not perfect science. Come over here. And I'm trying to build what I believe to be the movement of price, right? And what you'll see is that price will move just like it did over here. It'll move in these patterns where it'll put in these stages, what we call stages, and I'm jumping ahead here. But if you were a little kid and you had a crayon, it's easier to teach children to trade than their parents. Their parents have all kinds of bullshit in their head. Oh, but this is this, and this report's coming out, and I think that this is, and this is the CPA, and they have all kinds of shit in their head that they think they know. Uh-oh, we got jets. Now, I just drew lines on the top, bottom, top, bottom, top, bottom, top. You see the movement of price there? See how it moved? Top, bottom, bottom, top. See it? Now, those are what we call anchor points. Some people call them pivot points. But you see how that drew out? But what that established is a ceiling and a base. Hold on, we got jets flying over. And what this created inside of this up, down, up, down, up, down, up, down is what is termed in trading. You'll hear terms like whipsaw. I got whipsawed out. Price moved in, moved out. And this will, the minnow minds, the simpletons, this will confuse them, right? And then we see a break and it heads down. And then what? You see the same pattern start to emerge here. And as you look at this, it doesn't even matter what chart it is. What you're seeing is this pattern of price going sideways and then coming down and then going sideways. And that is right out of the money flow. That's how price moves. Now, what if price isn't doing that? Well, then it's not money flowing, okay? It's doing something else, meaning you can't just pick up any fucking chart in the world and go, okay, and force a money flow where there is no money flow. So what I'm looking for is to see the emergence, if I'm trading, of the money flow. I mean, the clearer I can see the signal, I mean, if it's just obvious and clear, the easier that trade is to trade. So as we start to build it out, what I'm trying to do is to make order out of chaos. And the more that I can make order out of this chaos, and if you look at this pattern here, if you have the book up here, see this little red line, price goes above and below and above and below and above and below. Well, the arrow is 20-day moving average. And it's just drawn kind of hard here. In reality, it's kind of loose and moves and flows because price is organic and every day you get a new bar, man. Just like in your life, every day you get a new bar. And if you're on my subscription feed, we've been talking about time, people's misconception of time, and at the moment you understand time, you think you understand it. Most people have very immature understanding of time and the concept of time times amount times yield. And if we could break down how much money you generate every day, we could plot that out here on a chart. And this could be you. This bar here is your activity. You woke up. You went to bed. Open and close. And what happened on that bar for you? You might say, well, not a lot. Okay. Then we do another one in there. Well, I woke up and I went to bed. Okay, we got 2. Did about the same as you did yesterday. And you start to build out a little pattern, and you have this little money flow pattern in your own life. And then you spiral down because life gets out of control, or you don't have the money, or you can't whatever, or you have days on end, just day after day after day of not making money, but you spend it because you wake up and you turn the lights on and money starts to drip out. And we could chart your life here on this little bar. And you got to start to think about that, the concept of time. How much time is wasted, given away? Now, in order to help us interpret this beautiful pattern of the money flow of just the 4 stages of price movement, and sometimes the money flow pattern is small and it's condensed and it's very tiny. We don't know how long a stage is going to last. We don't know what accumulation, stage 1 accumulation, but we can define it, right? We can define it, and we've talked about that endlessly, that once I see a stage 4 decline, now I'm looking for an anchor point. The anchor point is the apex of the 2 stages merging. And so the indicator of moving average convergence divergence, moving average divergence convergence, moving average divergence convergence, MACD, written by Charles Happel in the 80s. Moving average convergence divergence, and when they converge and then when they diverge, that's what's going on. So it's made up of a series of 3 moving averages, the indicator of the moving average, so of the MACD. Let's take this down. Now let's add a 20-day moving average. And a lot of people think they know about moving averages, but they really don't. They have a childlike understanding, a mental-mind understanding of the moving average. Let's see. And if we plot it as green and we put it on here, and we'll begin to see that price, just a general rule, price is attracted to this. And you say, why 20 days? Because it's the fractal nature of the markets. And if you'll see, price is attracted to this thing, right? It's what you see all in here. Price is attracted to the 20-day moving average. You can see, look, comes right back down in here, right? Let's stop that, take this over. And so there's an attraction here. And so you have to spend some time with this green line. You have to try to understand it. And you got people, you're trying to do an options trade and you're not intimate with the 20-day moving average. You haven't spent time with it. Just you and the 20-day moving average. What is it? Why 20 days? Because the market is fractal, man, and we're trying to turn order out of chaos. It's fractal, meaning there's 1 week, and 1 week is made up of 5 days, and 2 weeks is made up of 10 days, and 1 month of trading is made up of what? 20. Monday through Friday, Monday through Friday, Monday through Friday, Monday through Friday. That's what this green line represents. And so we know when price is above it or price is below it, it tells us something. It tells us if price is bullish or bearish. And it's just one of 6 things that we're looking at. And so there's 6 components to the checklist of the money flow trading system. So when I look, I need to scan it. I'm like, check 1, 2, 3, 4, 5, 6. Much like getting in an airplane. We don't just turn it on and drive away. We got a checklist we got to look at. And so what that checklist does is help us interpret what is price doing. Is it moving up? Is it moving down? Well, what is this doing? That's moving down with vengeance. And so if you understand this line, you would never buy that. And so the money flow saves you from being the guy that rushes in and buys this because it told you the next day it's going to keep going. And guess what? It's going to keep going until it hits until it hits a force strong enough to stop it. And it's Newton's first law of motion, and it plays out in the market too. What's in motion will continue to be in motion until it's not. And people think they can predict. There ain't no prediction. And I always know I'm speaking to a delusional person when I meet them, and they're so convinced of something can happen because they have no way of knowing that. And so they're this grandiose idea of prediction of the future. And yet what I do know and what I can do is I can count. And so one of the things that if you have my course Getting Started with Stock Charts, you'll know this here with price, that when price gets away from this 20-day moving average, we know one thing, it can't go up until it crosses it. And so if that's true, because it's true because of math, Meaning mathematically, in order for price to go higher, at some point, price has to be higher than the average price of the last month, which is 20 days. And so as long as price is below this, it means price is printing lower and lower and lower and lower and lower. Meaning the average of the last 20 days goes lower, and then it goes lower. And as it does that, it turns this moving average, and then it begins to point straight down. And as it points straight down, that means that the trend is determined. It's going down. But we know the further it gets away from this green line, the more likely it is to stop, because price is attracted to it. And you'll see all moves come with price breaking out above it and then continuing higher. And that's what this is. This is a visual picture of that. And then what we see here, what we call a, quote, stage 2 breakout, just means price, the average price of the last month, meaning price today, the open today or the close, depending on when you're looking at, is higher. If we were to take the last 20 days and add them up and divide by 20 and price is above it, we can say mathematically price is moving higher. Well, guess what? That's what happens on a breakout, is price rips. And if you're looking at a breakout and you're like, is this breaking out? Then it's not. Because a breakout isn't half-assed, and it's not maybe, and I don't know. It's either breaking out or it's not. And if you can't tell, it's not. Because it's not science. You're not sitting down there, is it 0.265 above? No, it's breaking out, man. And so our breakouts become very clear. This is down. So as I watch, and I watch this, right? Now what? Now if I could add some way, and I get DM'd a lot. Well, how do you know how much something is worth? And it's like, well, how do you know how much your car is worth? How do you know how much a house is worth? You can't be so naive to say, I don't know. Go to Realtor and put in your neighborhood and hit the button. Like most things in life are solved with a button. Most questions you have, you can Google. So we live in an age of people don't know about the stock market. They chose not to. Money flow is never-ending pattern. It's fractal in nature. So we could take this is a daily chart. We could take this and we could drop to a 5-minute chart, and we could hit the button, update 5 minutes, right? Or we come over here and say, no, let's go to 15 minutes. So each bar becomes 15 minutes. And we could say, no, let's come over here and let's go to 1 hour. And you're like, what is all this? This is the fractal nature of price, man. Let's go to hourly. And you start to see, right, price moves around. But what I'm looking for is the 1 day. Why? Because I'm trading end of day. I don't harbor secret fantasies of being a day trader. I don't want to sit at my computer all day long. I'm not delusional enough to believe here's how the lie starts. Here's how you know the guru's fucking lying. In 15 minutes a day, you can bullshit the moment you start to hear that. See, in marketing, the first thing you want to do is you want to present your story, and inside of the story, it answers a problem. So if it starts with a story, they're trying to they're trying to set the bait to answer the question for you. So they're going to start with your pain point. Too busy, and people feed into that, and that's human nature. And if you want to sell to humans, you just got to remove the objection, and you got to create a story that answers their problem. You're like, man, I don't have time. Good. Well, we have a solution. It only takes 15 minutes. That's called marketing. Be careful of financial gurus that market hard. If you why you got to market so hard if your shit is good? Why don't you just do it? And tell a few people, and they'll tell a few people, and they'll tell a few people. And if it works, then they'll keep telling people. It's how it works. But when you got to buy ads, maybe it's not so good. So as we begin to watch price, what I'm looking for are what we call anchor points. And anchor points are the lowest low. And I know that inside of when price starts to drop, like over here, it'll come down. And every day I'm putting in what I call an anchor point, meaning I'm calling this the lowest low. And how do I know it's lowest low? Because the next day it went higher. And I can't just go off one day. I need a fractal pattern. So I need at least the week, right? So what I'm looking for is 4 days to confirm holding this one. That's not the best chart for that. Let's pull up over here. So this here is the stock of Dow, and we see a big move down, right? And what I'm looking for is to start forming what we call a box, meaning I expect order out of chaos. And so I don't too much care what's going on in the world, bear market, bull market, whatever. I'm looking for stage ones, okay, to add. Or if I'm looking to trade, I'm looking for stage ones. If I'm a short seller, I'm riding the stage 4 down and I'm looking for the anchor so I can start to cover the trade. And you could trade both sides of the trade if your brain can handle it, if that's your natural disposition. But don't be confused. Price goes up 71% of the time, so you better be ready to take your profits and get out or to hedge your situation. And if you're trading scared or if you're worried, you'll get purged. The stock market is designed to take your money and give it to me. The stock market is designed to take the money from the masses and give it to the few. The 7% of this country own it, and everyone else works in it. Everyone else provides the dividends and the interest payments. They're the milk cows. You got to decide which side of the cash register you want to be on. You want to be an owner? Money flow helps you do that. So as we look at this, where did this, look at this one. Here's the exact opposite. Now this one, I've got the moving averages on there, and you can kind of see how they help. And we begin to say, okay, the fractal nature of price coming together, moving average, convergence, divergence, is when the moving averages converge and diverge, meaning the 5-day crosses the 10-day, and both of those cross the 20. So the numerical alignment of price is 1 week is higher than 2 weeks, which is higher than a month, and price is higher than all of those. And that's what we call a breakout. That's what's happening right there. Price is above the 5-day moving average. The 5-day moving average is above the 10-day moving average, and the 10-day is above the 20. It's a fractal pattern of price lining up to go into a stage 2 advance. And that's what you see right here. A price moving higher, the green side. You got the green side and the red side. Man, that's just the yin and yang. Price goes up, price comes down. And that's how it works. And a stock that's worth 60 can run to 80, pull back to 60, fall down to 45, run back up to 60. And because of that, and because you can take advantage of it, and because of the fractal nature of price, that if you have the courage to step in and can see this, then you can take advantage of it. And that's what the money flow does, is it tries to bring order to what appears to be randomness of price movement. Now notice this, down, 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 down. As long as price is on this side of the green line, it is a downtrend. And it'll keep being down. You could just take a crayon and draw. Don't make it complicated. Your kids can trade better with crayons than their parents. And then when it what? Look what happens. It inverts. And then price starts to print on this side. And if I had your child and I had a crayon, I could make him probably a better trader. Because the faith of children, Jesus said, is the kingdom of heaven is reserved for them. Why? Because of the simplicity of their faith. They don't add all this bullshit to it. And so as I begin to watch and I see price printing on this side of the green line, I don't need to look for reasons to doubt it. I just assume it's going to keep going up. That's what it does. And so I assume it's going to keep going up until it stops. And when it stops, it's the same as the stage 4 decline, where it puts in an anchor point. We put in an anchor point to the top. And the bipolar nature of the universe, high tide, low tide, love and hate, up and down. So many of these bipolar. Stage 1 is a 3, and a 2 is a 4, and an uptrend is a downtrend, and a downtrend is an uptrend. And that's what it's trying to bring, is that price floats as it goes through this, and all of our emotions and all of our bullshit and our baggage, it doesn't care, man. And the RSI, here's the hardest concept that people miss, trying to understand these indicators. Most people have a mental mind, man. They have a mental understanding of these indicators. They don't understand them intimately. And it confuses them. And they say, yeah, the RSI is 80, but I'm underwater. And it's like, RSI doesn't care, man. The RSI doesn't care where you bought the stock. It's just telling you what is. And where it's going and up and down, none of that matters, man. It is what it is. And what do we see up here? And there's this idea inside the money flow of structure, right? Of creating what we call support and resistance. And we can if we were teaching our children to trade, if I had your kids, I would be like, all right, dude, draw me little circles on the top, man. And it doesn't get that complicated. And after you draw them, man, connect me some lines, okay? And if you can connect lines, man, I just taught them a big, strong financial concept called support and resistance. Matter of fact, the less he knows, the easier it'll be to teach it, right? If the problem is, as soon as you teach it, they get in there and fuck it up with all their other stuff. So something as simple as that is support and resistance. And if I come back to the newsletter, it looks a lot like a stage 3. And a stage 3 is, we know because price broke out and then it rose and then it triggered that RSI. Price went extreme. And I began to look for a stage 3 because I'm trying to add order to chaos. That's what this is. Now, what do we do on a stage 3? Well, it depends on your goals, man. Depends on your goals. If you were a buy and hold investor, you might not do anything. And this is the celebration. This is the birth of you were right. You bought or added to your stock down here. Now it's up here. Congratulations. Let's have a distribution party. And that means that we can fully anticipate that the stock will come down. So young men, when you enter the stock market, guess what? It doesn't keep going up. Sometimes it goes down. And good stocks go down. And when it does, it purges the guy that wasn't supposed to own them. So if you're not supposed to own stocks, the universe takes them from you. Most people weren't prepared to own them. And so if you said, well, I want to be a trader, then you better learn about stop losses, right? If the goal is to move in and out, then you better learn about stop losses. You better learn about sector rotations. You better learn about different types of stocks and different types of sectors and allocate position sizes to one type of stock different than the other based on volatility. And so if you're a trader, you trade based on volatility, meaning the more volatile it is, the bigger the risk to you as a trader, not the larger the gain. A lot of people think, oh, it moves big, I can make more money. Yeah, but anytime you can make more money, it comes with extreme more risk. That's why I try to encourage people not to do options until you understand the movement of price in such a way that you feel like you're in tune with it. So this is how price moves. And these things give me best buying opportunity, best selling opportunity. That's talking about for traders. So as an investor, I don't want to buy stage 3s. As a trader, I don't want to buy stage 3s. But as a short seller, I might want to buy stage 3s and then add on the stage 4 breakdown, right? If I was short selling. But be careful. And so as we look at alt, it is the opposite. Now watch this. See this? We had our support and resistance draw it out, right? Price broke it and then only to come back into the box. Meaning it tried to go lower, but it came back and then back above the 20. So we still have a stage 3, but price didn't want to go down. Might go up. We shall see. A lot of people misuse the MACD. The MACD is a momentum indicator. It's not perfect, but what it gives you is the momentum, meaning that little tick there. And if, again, we're talking to kids and we see from here to here to here, can you draw me a line on those? And the kid could take his crayon and do a line. And if I said to such a child, hey, anytime you can do that, assume that's the direction that it's going, meaning the momentum. So what I'm using this for isn't so much as a directional indicator, but as a momentum indicator, right? So even over here, so as price climbed up, what I'm looking for, how do you know it's the top? Well, a couple indicators, but when you see that pullback, that tells you the momentum to the upside right here is done. Now, if we combine, and that's the day that it confirmed right there, and if we were to run that up, is that the top? No, it's not the top. So we know it's not a perfect indicator. Not all of them, none of them are perfect. There is no way. There's no way to know. But what the indicators do is they indicate, right? That's why they call them indicators. But they combine together. It's like making an apple pie, you know, one piece flour, sugar, flour. That's what these 6 things are doing. Are trying to help you interpret this. But if you went with this alone, you say, okay, look, Looks like the momentum is slowing, prices tick down, right? So we're trying to do the stage 3. But if we come over here and we look at what the moving average is, 5 days above the 10, 10's above the 20. What does that tell you? Meaning it's a strong uptrend. And the stronger the uptrend, we know these indicators are going to start to fail us because price is running away. And we have to be able to spot that. And you say, why? So that we can let it run away, so that it can make us money and you can know. And you don't be the guy go, well, I got all out. Why would you get all out if it's going up? And I see people do that a lot. They get all out. Oh, I was going to go buy this. So you're going to take a stock that's going up, that's actually doing what you want it to do, to go buy one that might do what you want it to do. And sometimes people become scared. Price went so high, I had to sell it. You're like, you had to sell it because it was working? And that was their only reason. Well, it went up and I made money. Well, maybe it's going to make 10,000%. Maybe it's to be the trade of your life and you cut it short and you'll never catch the trade of your life because you don't have a strategy to keep you in the trade. And so we have to plan it. We assume every trade could make us rich, man. Why would I get out if it's going up? So if the 5 days above the 10 day and the 10 days above the 20, there's no reason to get out. You just let it drift. And we don't get worried until what? Moving average convergence, divergence. Prices begin to converge. 5 day and 10 day and 20 start to come together. That's the zone where you're going to run into problems. And on the money flow chart, we show it like that. And if we have a stage 3 that was built, meaning we have an anchor point to the top, we have 4 days to the side, and we begin to look, and we can draw it out with like kids with crayons, and we can see that natural movement of price, man. And if we lay that over value, and the guy says, well, how can you know the value of a stock? And I said, how can you know the value of tennis shoes? You go to Amazon, you put it in, and it gives you the price. Everything on earth, you can go to the internet and put it in, it gives you the price. If you want to know what to pay for a car, go to the website, put it in, it gives you a price. If you want to buy some Doritos, you go to the thing, you put it fucking in, and it gives you a price. And for some reason, when it comes to the stock market, things that people naturally do that come easy to them, they turn minnow mind. They're like, I can't figure it out. It's like, no, there's a website. You go put it in, and it gives you a price. You're like, wow, that seems so easy. The problem is the abyss of money. The problem is that people live in scarcity and think, well, man, it's got to be more complicated. It's like, no. And you're like, yeah, but it changed. I know, money's a social agreement. Meaning one day we're willing to pay this for used cars and this happened. Now we're willing to pay this for used cars. One day we paid this for watches. Now we're willing to pay this for watches. One day we paid this for beach condos. Now we're willing to pay this for beach condos. And sometimes you're like, well, that price is too high. Nobody asked you, man. You don't get to determine that. And I see a lot of people in real estate think they can fucking determine it. They get to the, oh, price, you don't know. You don't know social agreement. You don't know how high it can go. Fucking Japan, it went for $4,000 a square foot, man. Go look. It was the most expensive place on planet Earth. The island of Japan was worth more than everything had ever been made. It was worth more than the overall, like it was a ridiculous value. And so when people, well, it can't go any higher, of course it can. Of course it can. It can go beyond what you can possibly fucking comprehend. And one day houses in Los Angeles are going to be 4 or 5 million for regular people. Why? Because houses appreciate at 5% a year. You better get on board. You're like, well, they're too expensive. Well, they're going to be more expensive, man. Just so you know, wherever you live now in 5, 10 years, they're going to be more than they are now. And if that's obvious, and it is, because it's called the past, and you can go back and look and you say, hey, Mom, how much was a house when you were a kid? And she'll say, I don't know. And I'm like, yeah, that's why you don't own any. You go back and look and ask your grandma, why didn't you buy 10 of them? They were too expensive. And you say, well, why didn't you buy more stocks, man? Because it was scary. Because stocks go down, volatility, and Reagan was going to do this, and Jimmy Carter was going to do that, and the economy, and we were running out of fucking, and blah, and there was this, and that every generation shares in that fear, and every generation chooses ignorance, and every generation has most of their people stick their head in the ground, and the internet doesn't change that. Don't think because you got a phone that you're not going to do the same dumb shit your grandparents did and before them. Go ask your friends. They're going to be as broke as they choose based on the things they focus on. And if you begin to focus on this and watch this and you begin to pick up stage 1, guess what happens over time? You accumulate wealth. And so it's not complicated. And that's what this pattern is about giving you a way to do that. So when you wake up, there's a method for execution, right? So if I'm looking at this and I got a few bucks to add, you're like, should I buy alt? I don't know, maybe. And here's the other thing about it. It's when do you get on the bus? Meaning, when do you get on the bus? So if you think this is worth $24, you might be like, whoa, okay, we put in a bottom here. This stage 3 could turn into a stage 1 and rip higher. But let me show you what happens to the minnow mind. Because we filter everything through us, we're going to be like, well, man, I got in over here. And then it ripped and we did the stage 2. So you're making the filtered assumption that it has to go down because of when you got in. And you're like, well, it's got to go down because it went up and the price is too high. And it's like, no, this 3 can become a 1 and then it rips again and it runs to $20. And if you allow where you got in and you filter everything through you, then you'll miss the big move, man. And so be careful if you don't just judge price and people say, well, I can't buy that or I can't add that. My price point's up here. Nobody gives a shit. Nobody cares. Nobody in the universe wakes up and goes, I wonder where Larry bought it. Nobody cares. So the kid that bought right here is buying the possible breakout. He don't give a shit if you bought it up here or down here. He just got on the bus. So he doesn't have the hang up of this. You get it? Meaning price doesn't care, but we as human beings bring our laundry with us. We bring our filters in here and we make assumptions and we assume as if, so look, it came way down and now what? Well, if you bought up here thinking it was going to run again and it comes down, you might have a different opinion of the stock. Why? Based on when you bought it. And here's the thing, money flow don't give a shit where you bought it at all. It doesn't care, man. That was the first anchor point, by the way. And you're like, what is an anchor point? Do you buy this? Absolutely not. Is it, I'd go look and see, is the RSI extreme? Right? So we could put the RSI on here. So let's do that. We don't have anything on here. We could go read about the relative strength index and who created it and who wrote it, and that's called an indicator. And why and what does it do? What does it measure? It measures what? Price velocity, meaning how fast a price moves over 14 days. It's all it's measuring is price velocity, excuse me. I like to put mine above because it's the superior indicator. So as I put it on, right, and it comes down, 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 what I'm looking for is the first day that holds were 3 other bars, 4, because 4 makes a box and it almost completes a week in its fractal nature, meaning it can't be the bottom if several days don't confirm. And I'm not trying to, like right there, you're like, well, maybe I'll buy that. Well, you don't have any confirmation. Down day, down day, down day. I'm not trying to guess. I need a pattern that I can do over and over and over and over and over for the rest of my life. I need a pattern. And I know until price gets on the other side of this line, it ain't going nowhere. So as I begin to combine the 6 elements of the money flow, I can make my decisions pretty easy. And I know this. I know when prices stretch far from the 20-day, that any buy signal that you have in there is bullshit. Price has to compress and come together. So I don't even trust this if it started to build a base because of how far it is from that 20. Because I know it can't run until it gets on the other side. So I don't want to be tricked. And I know the moving average convergence divergence, that price has to compress on each other. And so as it comes down and the moving average heads down, I'm looking for price to stop. And I need that anchor point, and I need 4 days or 4 bars that hold it before I can even think. So 1, 2, 3, 4. And now what? Now I'm getting that anchor point right there, right? And I start to build it out. Well, what happens? Oh, price dipped below it. Oh no, here we go. It's an Eminem song. Didn't see that coming, right? Down it goes. It broke the box. And then guess what? Back into the box, one of the most bullish signs. Any box that was established, price breaks it, comes back into it, is super bullish. It's double confirming that, man. Double confirming that. And that's a whole class in and of itself. And we're just doing an overview of a lot of things here. But in looks, what happens? Until this starts to come together, man, price can't do anything. So we're in no rush. And so all of a sudden now, because I have a repetitional pattern, I begin to trade with confidence, not based on what price is going to do. Some people get in and think, well, I'm a good trader if I make money. Man, that's all fucking random. You clicked a button and it went up. Don't get too high and mighty. It could have just as easily went down. We don't know the next card. You don't know what's going to tweet or Biden's going to say, or fucking Russia might launch a bomb in New York City on Monday, and all your little trading plans go out the window. And so you're dealing with disorder. And so if that happens to me, what do? I wait. What am I waiting for? The setup. I don't know where price is going. It's just a social agreement. I talk about that. If you don't have my new book, you don't have the mindset to do this, man. Get that new book, man. It'll explain the mindset behind a lot of this stuff. It's just social agreement. The stock was $69. Now the stock is $52. And here's the thing. The stock doesn't care that you bought it at 68. It's now 51. Same rules apply. So as price comes down and I start to look for that anchor point, what am I looking for? As an opportunity to what? If I'm looking to buy, I'm looking to buy. If I want to swing trade it, what am I watching? I'm watching for it to stop. I'm looking for that anchor point, the connection between stage 4 and 1. That's my anchor point. If I was in a boat, I dropped an anchor. Boom. Does the boat immediately stop? No, the boat floats around the anchor. And so you'll see price go up and down and drifting as that moving average stops and starts to go sideways, and you get these zones of chaos. And so it's distribution and accumulation are zones of chaos. Bulls and bears coming together to agree to disagree, man. And you have moments of conflict. These aren't, for you, they may be a buy signal. For someone else, they're a cover, a short. And so everyone's coming at it different, and they're not seeing it. They don't have your filters. They didn't buy it when you bought it. And sometimes people are like, well, I'm afraid to buy that because I bought it up here, and it doesn't care, man. That's the thing. It doesn't care. And price just is what it is, and it moves through this pattern. So as I watch that pattern, what am I looking for? I'm looking to walk outside, and there's clouds if I'm looking for rain. So it's not that hard. I don't have to be a meteorologist to know it's about to rain, nor do I have to be some technical wizard on a chart to know that it bottomed. And as I begin to study prices, it comes down, eventually puts in a bottom, and then everything starts to come together. Same, this here. So watch. This here, this down move into what? This side move right here. What we show on the money flow is down and over, right? Is the left side of the pattern of down and over. It's just the flow of price. Now, and the guy says, well, how do you value a stock? Google it. Yahoo will give you a roundabout way. You can pay for services. I do. I go in there, I put in the ticker, and it tells me. You're like, what do you mean? Because this is they judge it all that they use basic accounting, man. They now have what they call algorithms, and algorithms can source the books real quick. Go through, look at cash flow statements and how much cash on hand, and they can create an algorithm that looks at 5 key components, and it gives you a 1 to 5 rating. I mean, you can get as fancy as you want. There's many services, and some simplify it. Some use a 1 to 10 rating. Some use true value, whatever you want to call it, and they come up with a value. But because it's a known, like they're using known financial accounting, right? And as long as it's known, and once you understand how stocks move, that a growth stock in the right environment can trade at 50 times earnings, 100 times earnings. But in a negative environment, like rate decreases, then it explains Uber comes down. And once you begin to understand that, make sense of that, and realize that the market doesn't move based on logic, man. Everybody trying to be logical. Sometimes I get guys in their 30s, they'll start explaining to me how the economy works. And I'm like, is that what you think, bro? You figured it out? You read that in a book? Well, let me let you in on some shit. It doesn't do that. And when things look the worst and they can't get any worse and people are losing their homes to foreclosures and things are awful, stock market breaks out and rips higher and the rich get richer. And you'll see people on TV crying, oh, stock market's going up, but no shit. It's been doing that forever. You see people crying during COVID. It ain't fair. Market's going up and the poor people are getting poorer. I know. They were purged. It's supposed to. Nature has this crafty system of eliminating the weak, man. It's supposed to. Most people are supposed to lose their money. 7% run this country. Who do you think owns the stocks, man? The only way most people own stocks through a 401k. They don't know what fuck stock they own. They don't even know who the fund manager is or what the return on it is. They're so far removed from the market, they're not even participating. It's more of a big duh. That's what's going on. And then they get sad and sick because all of a sudden when times are bad and they're doing terrible and stocks are ripping, they know somebody's making money, but it ain't me. And it's like, yeah, but nobody kept you out, bro. You got working thumbs. You could have clicked the button and joined the party. People choose not to click the button, choose not to join the party. And this is how price moves. And this is what this does, man. This is what the money flow does, is it allows you to come in, and maybe you don't do the money flow. Good, do something else. Here's what I do. People do other things. I don't even need to talk to them. Go do you. I'm doing this. Right? Now watch this. There's a boom, there's your breakout, and then price moves higher. And guess what? It starts to put in a stage 3 box, man. So we could assume, well, price is going to go over, and then maybe price is going to come down, and then it's going to go over, and we're going to do the money flow. And so we're looking, and guess what? Look, RSI went extreme. And so a naive baby way, a minnow way of looking at the RSI means, oh, well, it banged it. I need to get out of my position. And it's like, no, it can keep going. So what we do is split the difference. We know that price often turns when this thing triggers, when this is the canary in the coal mine, so to speak. Alert! It's telling you, look what's up, man. Price is about to stop. But on the juicy trades, on the runaways, on the ones that don't look back, that make you the most money, that make up for all those losers you did, those are the ones that keep going. And they can run, man. And they can stay in this green zone, but it won't stay forever. And so the higher it goes, the more we realize that, and the more we start to downsize the trade. And so you could get this finesse about it. I finesse my way in, I finesse my way out. It's like a dance or a song or a sales script you get what I'm saying? And you got to dance with it, man. You got to dance with it, finesse it. And you start, man, I'm going to trim a little. Next day, trim a little. Next day, trim a little. But keep myself in the trade, right? Man, and this is why I don't like to make decisions during the day. Because if you'd have asked me at whatever time of the day that was, what's up, I'd say stage 3's broken. We're going into a stage 4 decline. But guess what OGP likes to see? Where's the close? Right there, the tick to the right. If you don't understand the difference between open and close when it comes to charts and trading, you're going to get stopped out a lot. You're going to get blown out. You're going to be like the people at 9 a.m. in the morning, the chaos. I don't do shit in the morning. All I do is read. I execute no trades. I'm just looking. I'm not tied up in their urgency. I'm not in any fucking rush. 10 cents here or there, 20 cents here or there, it doesn't fucking matter. You know, whether you got in right there, if you were just standing here with your finger on the trigger and the moment it crossed into, jubilee excitement, you were able to buy right there on the breakout, or if I fucking bought over here, it does not matter when we go up, because a lot of times it's when do you get out? How do you finesse the out, right? That's more important. How do you play this trade? Because maybe you got out over here. And if you've ever heard me teach on this, there's a thing called a completed swing trade. What does it mean? One RSI extreme to another. When that happens, most of the time, but there is no certainty, that trade is over except for the really big runners. And I always hope I have a big runner. I hope it doesn't go sideways. I hope it just keeps going. And that same effect, bipolar nature of the universe, love and hate, high tide, low tide, plays out to the up and to the down. Price can go too low, and it goes so low that it purges you, and you get out of stocks, and then you start to speak things. Instead of excitement about your stocks, how busy you are at work, and I got to do this because you got purged. Nature purged you, and you weren't supposed to own stocks because they're reserved for the mighty. Let's see. Don't doubt that. Look at this chart of Uber. One of the concepts of the money flow is as price moves through, let me explain something to you. As price moves through stage 1, 2, 3, and 4, 1, 2, 3, and 4, 1, 2, 3, and 4, and let's say you're buying a stock for $12 that we think is worth $30, that's the what? That's a 300% return. Well, it might go through 20 rotations to get there. Meaning it might, here's $12, $11, $10, $20, $11, $20. Boom, breakout, runs, stops. goes sideways, 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 sideways. Shit comes out of rush, back down, stops. Sideways. So we might do that 20 times to get the $30. And so the money flow gives you a chance to add, take down if you want to micromanage your trades that way, or just pick up on stage ones, or maybe just trim threes. And so maybe you bought a lot of that stock and now it's on an obvious stage 3. And so you're like, cool, let me take some off the table. Doesn't mean it's not done going up. But a man who flips a house doesn't look back next year and go, wow, houses are worth more. Maybe I should have held it. And it's like, no, that's not a house flipper. And so a house flipper didn't give a fuck what the future price is. And neither should a trader. And so if you're approaching this to be a swing trader, better get your mind together. And so if you're one of these guys out there that has a hard time matching your socks or getting to work on time, trading probably ain't for you. Right? Because it requires you to have the utmost control of your personal life too. So if your life is chaos, you might back it up a bit and get order. This is about bringing order to chaos. So don't be so deceived. Nature's a purging element, man. It's trying to keep the weak from gaining too much power. So you can't be weak. But look at Uber, and there's this concept in the money flow that where price has been before, price stops again. Meaning those little boxes I was telling you about, the anchor point, and then it starts to go sideways. Those zones, that's where price goes again. And that's where price tends to stop. And that's what we're starting to see here. But just like price selling off, every day I'm looking for a top. There's the top. Nope. Next day. There's the top. No. What about the next day? And they said, where do you think Uber's going? I think it's going to stop. Why? Because the RSI is 78. You might say, well, I thought you said Uber's worth 60. It is. Well, would you buy here if it's going to 60? No. Why? Because I want to buy stage ones, right? If I'm trying to sell it at 60. Now, if I'm swing trading it, there's a breakout, right? There's a breakout. Here's your anchor points. So if you own this and you're buy and hold, guess what? And you had trading skills and you have the ability to buy and hold, which is a rare combination, by the way. People with guts, courage, and they know trading. It's a rare group of people. Oh, it's a rare group of people. I like to refer to them as the money flow gang. Whole purpose of the money flow gang, my Discord, all that stuff is to make you rich. Rich is the repetition of certain activities. So like causes produce like results, man. I could sit down with a marker and show you how to get rich. What I can't do is make you insert yourself into the system. I can't keep your focus. You might get purged by nature. Where price has been before, price tends to stop, especially when we see the RSI lining up. And then there's this concept inside the money flow. If you have my trading courses, one extreme to another. This is a completed move, man. Completed, it's actually from over here. Meaning that move is complete. And if you look, it went from 22 to 32. It's a $10 move. That's pretty good for one money flow cycle. There you go, one money flow cycle. It should stop here, man. That'd be normal. People like, oh man, are you sad? No, money flow told you that. So before the market stops going up, you're going to get an anchor point and it's going to stop. We knew 4 fucking days ago because we got the anchor point. Then it went sideways. Are you shocked now that it pulled back? No, that's the order of price. That's a natural order of price movement, man. Right? So what do we expect? I expect Uber to pull back. What do you think? It's just going to go up and up and up and up and up and forever? No, man. Oh, and by the way, I had a lot of people, because they know I love Uber, like, Gerald, do you still like Uber down here? Yeah, bro, I like it even more. Why wouldn't I like it here? The best time to have bought Uber was down there. It's when people did want to own it because it come down so far. It's so hard. And when I log into my account, it's so far down, I don't like to see it. And yet, that's the time you needed it. And so nature purged those who couldn't hold on to this. And this is reserved for the mighty. This is where you get purged. And so as you begin to understand price, I'm talking from an investment perspective, you don't fear these move down, man. This shit is funny. Building wealth in the stock market is funny, man. And it cracks me up because people are still worried about the down movement. What do you think? It's like, yo, man, in order for this to have made me money, I needed this, baby. Once you understand that connection, it's like, man, God, man. People worry about the dumbest things. You need to worry about matching your socks, getting your shit together at home, not where stocks are going. I know where stocks are going up. I know where housing prices are going up. I've been saying that for 20 years. Every fucking day I wake up for one goal, accumulate more shares, buy more properties. I've never woke up with the idea of I want to have less shares and no properties. That's for the minnow minds, man. That's for the people that get purged. That's for the people that pay my rent, that produce the dividends and the interest payments. They've decided what side they're on because they operate out of fear, man. I know it's just the natural rhythmic order of price, and that's how nature purges people, through volatility. Come on, man. Let's see. I refuse to be purged. Let's see. For that, nature has rewarded me greatly. How does a common man accumulate millions of dollars, never having had an expensive job, never went to college, never did anything? That shit ain't even fair. And I meet doctors. I go to my doctors. Most of them, I got way more money than they do. And they're way smarter. The good thing is, Science of Getting Rich teaches us. I'm so convinced of it, I'd have a whole podcast devoted to the book. That the reason that is true, because I read that book and he read medical books. I read that book and believed it. I'm the dumbass that said, I think you can manifest things. I think I'm going to go with that. I ain't got a college degree, so I better go with this. And sometimes I meet people that are broke, and I'm like, what other option you have? If you don't believe what I'm teaching, what are you going to believe? Because everything else is telling you, you're fucked. Get it? So I spent last night, if you follow my story on Instagram, I was cruising the city, hanging out with some folks. They ain't got their mind on this, though. And guess what they don't have? Money. And I talked to a couple people about some real estate, and this one person I was talking to about real estate, she said, yeah, I sold a property and I got $80,000 in equity. And I'm like, what are you doing with it? And she goes, well, we bought some of this. She's slowly dripping the money away. She doesn't know anything about this money flow thing here. See it? See the money flow pattern here? And you're like, yeah, but it didn't go up. It went as far as it wanted to go, and then it went down. And then there's another, it tried to go again. Now we have a bottom. What is that right there? So you needed Ford to have make your money here. You needed Ford to go from $25 over here, which is a top, by the way. Look how clear. RSI went extreme, put in a box, rolled over, and broke. So the money flow gave you the exact top, by the way. They said, well, you can't pick tops and bottoms. Bullshit. I do it all day long. Been doing it for a very long time. It's just, how do you want to play that information? Right? So if we're watching, now here, I'm going to give you a secret, man. I'm dropping a lot on you. I know your brain can't comprehend most of this. This golden line here, it's called not a golden shower either. Okay? I know how a lot of you think. This is a 200-day moving average. And it's golden, though. This is the honey pot right here. When price goes below it, extreme, again, price gets far from that 20 up to the down, and it pays a dividend, it's going to this 200. It's the easiest trade in the world, man. That is a clear breakout right there, a price breaking out. Well, the only way you're going to know that is you watch it every day. And I meet a lot of young traders, and they're like, what kind of filters you running? Bro, I'm not trying to save you some time. Fuck out of here. You better earn the right to be here before you get purged. So long before you're looking at filters and other dumb shit, you better start following charts and put in time and deserve it. I mean, you don't run filters, man, if you ain't got some time in the saddle. What are you running a filter for? You need to learn the market. This ain't about doing it convenient. This is about you putting in work, man. So you scan and look at charts. You scan and look at charts, man. And you look and you start following some. And as you follow some and you read about them, you begin to learn about sector rotations and the market. You don't need filters, man. You don't need filters. Not at first. What you need to do at first, put in work. That is a breakout, stage 2 breakout, price breaking. Now look, notice we talked about in the beginning, 5-day, 10-day, they're all on this side. So price is on this side of the green line. And what? So now we got a stage 2, and what do we anticipate? It'll keep going until what? The RSI goes extreme, and then what? It'll stop. So we had sideways, up, and now we're going sideways. RSI alerted, and what do we anticipate? That it's probably going to roll over. Maybe not, though. Maybe not. But would it surprise you? And if it came back, where would it come to? Where it stopped before. So it would come back down. Then it probably, so that would be like price coming down. And then it would start the natural drift sideways. And that would be a natural flow of price. But here's what will kill you is you will interpret all of that information based on where you got in, and it has nothing to do with this. Meaning price can be too high right now, even though you bought it higher. And I'll say, well, trade around a position. They'll be like, what do you mean? Because if I get out, it would be like locking in a lot. You already lost, man. The price is the price. Ain't some magic shit. You're trying to hold a stock and like, I don't want to sell that stock until that is the minnowest mind approach to the stock market, because you don't need to make your money back in this stock. You're like, what do you mean? Meaning, let's say you hold 20, 30 stocks and you're down 30% in this one, and the RSI's banging overbought, and you're like, cool, I'm gonna trim that because I'm gonna go add to this one over here. And if this stalls out for 2 or 3 weeks, and the money you trimmed, you add to one that rockets up 30%, and then you start trimming that one. When this comes back and sets up again, then you trim that one, you're back to adding to this one. Now you're trading around a position instead of sitting there paralyzed by it. And that blows people's mind. They think you ain't got to make it back in PayPal. You ain't got to make it back in that. You could have trimmed. Let's look at BNGO's one I'm in. We trim this. Why am I trimming this? Bought the breakout. Now what? RSI's extreme. Okay, but if we look, where's the previous high? Next target is previous high. Well, if you look to the left, it's up over here, right? So I can come over here and draw a line. I don't know if it's going to get there, but I know that's where price is attracted to. So I draw my line. There's my next target. What happens when it gets there? I'm going to take a little more off, and I'm going to finesse this. This is a dance. We're dating. Me and Bingo are dating. I gotta play this right, man. We gotta play this right. So it's probably gonna need to take some off there. And well, what do you see? You're gonna see a natural run. There's a money flow there. Sideways. Look, there's your sideways, right? And then what? Up. And then what? Sideways. And then what? Down. Right? Where did it stop? Right. It stopped right there where it stopped before. Does it have to stay there? Nope. Went on down. So guess what? When it gets here, does it have to stay there? Nope. It could keep on going. Up is the down. High tide, low tide, man. It's a bipolar nature of the universe, man. There is no too high and too low. Well, housing prices here are too high. No, it's too high to you. You can go a lot higher. Nobody asked you. Like, the price isn't relevant to you. You just might not be a buyer, but it ain't going to keep it from going up or going down. And if you're like, well, I paid $5, but nobody, it doesn't care. It could top out. And so you could be like over here too. Look, bam, this was tricky because it didn't bang, but just say it banged the RSI. And you're like, well, I don't want to sell it here because I'm still down. Okay, don't. Guess what? You're down even more now. You could have trimmed over here, took your gains, let it come in. Now what? Now we're adding back on. And now we've run up. And guess what we're doing? We're trading around the position. But if we're paralyzed by the mental mind because of where I got in, nobody cares. That only matters to you, man. It doesn't matter to the stock market or hedge funds or closed-end funds. You better realize who's buying these stocks. Family offices, insurance companies, they don't give a shit where you got in. That only matters to you. And so once you realize that, wow, okay, I could trade around a position. I don't need to make all the money back in Uber for Uber, meaning I could trim some here. And yeah, it keeps running. Okay, cool. I'm take that. I'm trying to put it into something else, right? So if we look, where's Sofi, man? Where did Sofi stop when it broke out? So let's look at the breakout. It wasn't much of a breakout though, to be honest. Right here, yeah, that's a decent day right there. There's your breakout. Where's your anchor point? Right there. And you're like, what do you mean anchor point? Now I'm going to show you something. This is the natural order of price movement. Draw a line over. Price ran up. Price went sideways. Price came down. And where did it stop? Exactly where it stopped before. And guess what? It held it again. The more it holds that, the more you know that level's solid. And then what? We got a breakout. So we got a base and we got a breakout. This is tradable. But here's the problem. Where's it going to stop? Well, previous high is usually where it stops. And where did it stop? Previous high. Does that mean it's done going up? No. But if I was short-term trading this, that would be a target. I bought 1,000 shares at 6. I've hit 8. I've made 20% on my money. It hit a previous high. What do? Take some down. But look at the moving averages, 5-day, 10-day, 20. The trend is still to the upside. So I take some of my gains and what? I'm going to let it drift. And look, the RSI hit. The moment that thing turned green, this shit stopped. And it was a previous high. So if I'm trading it, boom, boom. There's your money. $2 move right there. And maybe your strategy is take the money and go. That's not mine because I think this could go higher. And I want to ride it if it does. I want to ride the runaway, man. Ain't no way I'm going to watch the stock go up 300% and I got out because I'm going to go take it all and go do. Fuck that. If it's going up, it's going up. So if this is going to be a runaway, I want to ride it, man. I'm not trading out of fear, man. Right? So as we begin to break this down, where's Delta? One of my trades of the week. Why was this a trade of the week? Big down move. What am I doing? I'm looking for anchor points, which is what? The lowest low. So every day on this, is that the low? No. Is that the low? No. What about here? No. What about here? All right, we're holding it. Do I jump on that? No. Look how wide. Look at this pattern here. Whenever you see this, how wide it is, it ain't going up. So wait. Why? It's not going to go up till it starts to go sideways. And notice what happens with all those moving averages. The moving average convergence, divergence, they come together. And this is a repeatable pattern. So you've seen it. I broke down. I'm back to it again. But I'm combining price movement, the general movement of price, with the moving averages, with the indicators, right? And I'm looking for this pattern right here of movement behind a basic belief that 71% of the time stocks go up. Who gets purged? People that never understood this. They're trying to play basketball without dribble practice. Oh, coach, put me in. I'm just going to shoot 3-pointers. Coach is like, nah, bro, you're riding a bench. You're going to get fucking purged out there. You need to practice. And that's what, so when we do that, we have, this is my fundamental belief, man. This is the gospel right here. This is the trader gospel. It's all about this, that over time, prices go up 71% of the time. Not every single stock, but as a general rule, all the stock market over time goes up. And the bigger the stock, the more likely that's true. The lower the tiers that you play in, the higher the possible return because of the volatility of price. And so if all your stocks are on that high-end nature, don't be surprised when they go down low because they're designed to go higher and lower. That's what they're designed to do, man. Biotechs, penny stocks, the more volatility attached to it, right, the more profit you can earn, the more loss you can make. And then you get into shit like Pepsi, Home Depot, those quality plays like that. Well, they're not going to run up 50%, not in any given day. But you could buy a biotech and wake up next day and it's up 100%. That happens all the time. That ain't going to happen to Home Depot. That ain't going to happen to AT&T, right? So based on this is the beautiful thing. Based on your own personal risk tolerance, you can begin to trade in that. But watch this, and we'll start to wind up. But if we come over here and we're intimate with this RSI and we respect it, you're like, man, I only care about the extreme. I don't give a shit about any of this stuff, right? As a swing trader, it's what I'm looking for. So what that means is when this sells off here and this starts to go sideways, I'm not lured into that for a swing trade. Why? It never got extreme for me. Doesn't mean it won't be a good trade. Doesn't mean it won't go up. Doesn't mean any of that. But it doesn't get my attention. Why? Because it wasn't completed. An extreme up all the way to extreme down. And we get what? A completed move. So when I see this in the stock market, because of my intimate relationship with RSI, and I see an extreme completed, I'm like, all right, man. Previous high. Shit, we got something now. Now what? Let's go see. What's Delta worth? You're like, how could you know? Type in the name, hit the button, and it'll tell you. Yeah. You want to know what a house is worth? Go to Realtor, type in the name. You want to buy some shoes on Amazon? Type in the name. They'll give you the price. It's the same thing. It's a market, and the market gives you the price every day, right? And then you can say, well, what is the value of that? And you go, well, here, this is the true value. That don't mean people want to pay it because there's a social agreement element to this. Meaning it might be worth 60, but not to anybody right now because the market doesn't move based on logic. Market moves based on fear and greed. And if they're scared, they'll throw away the baby with the bathwater. They don't give a shit. And that makes opportunity for us. And there's our honeypot. They'll look at the yellow golden line. When price gets way below it and the RSI goes extreme, these become some of the easiest moves. So what I'm looking for now, everything to come together, right? Moving average, convergence, divergence, things to cross over, stochastics come out. We didn't even get into that. There's my buy signal. I go, look, stock's worth 45 something dollars. I know, well, shit, where's it been before? And you're like, what do you mean? Where's it stopped before? If I come over, I'm going fast here. You would probably take a little more time on this. And I go look, and you're like, what do you mean? I said, I know. Remember we were talking about showing kids? Like, it stop there, draw a circle, little Johnny. Give me the crayon, little Johnny. Stop there, stop there. Look, little Johnny's a better trader than you. It's easier to teach your kids. And then I said, okay, every time those point, then draw me a line, baby. And he draws me a line. Well, guess what? On the way back up, that becomes a target, man. Why? It stopped there before a bunch of times. It'll stop there again. Might not be the final stop, but it'll stop. So we're going to play the difference. We need to start downsizing the trade because that tends to be where it is. And that'll probably be banging that RSI. So as we begin to see this, it all begins to make perfect sense as we look at it. And that would be a perfect money flow move. Sideways, running up, banging that RSI, going sideways. Does it then go down? Maybe, maybe not. But as a trader, there's the money in that move right there. You're like, but what if it keeps going? I don't know. Don't be the house flipper. It looks back next year and go, oh my God, I hope the house isn't more, because it will be. I mean, he don't give a shit. He flipped it. He's moving on. If you're trading, you got in, you get your money, you wait for the sell, and then for me, I get out over here on the sell. I don't get out if it's going up. I either wait for the stage 3 to clearly define itself, or I wait for the break right there. I'm not getting out just because it went up. That's a dumb reason to get out, man. You know, why? You're making money. So there's my target. Look at the moving averages, 5-day, prices above it, 10-day, and we're just drifting higher, man. So that's the stalking nature. Once I understand the money flow, I can then stalk price, and I can follow it. And so instead of following a filter, just follow these stocks every day. Wait for this setup, man. There's 50 trades you could take any given day. I follow 200 stocks any given day. There's 25, 30 setups, man. So it's not like there's a limited amount, man. There's not a limited amount, man. Where we at on this? All right, we got a few people on YouTube, man. I appreciate you guys coming in. I appreciate you guys, man. Yeah, go check my story, man. For rolling around New Orleans last night, we went to this bar, listened to some music. It was nice. No thought of form can be impressed upon the original substance without causing the creation of the form. Thought is the only power which can produce tangible riches from formless substance. That's where prayers go. That place when you're like, man, I wonder if anybody's listening. That place there, that's formless substance. It's just flower language and the science of getting rich. Hit my bio link. This ebook's free. The stuff from which all things are made is the substance which thinks. And a thought of form in this substance produces the form, meaning it starts with a thought. Original substance moves according to its thoughts. Every form and process you see in nature is the visible expression of thought and original substance. The Bible says the same thing. In the beginning was the Word, and the Word was with God, and the Word became flesh. As the formless substance thinks upon the form, it takes that form. And as it thinks on motion, it takes that motion. This is the way all things were created. We live in a thought world, which is part of a thought universe. The thought of having a moving universe extended throughout formless substance and the thinking stuff moving around according to that thought took the forms. Point to all that. That's a fancy way of saying it goes on and on. You can read it for yourself, but your thoughts. That's why it's so important that you understand the natural movement of price. Meaning we're going to make the most money at $44 if we were cool with the drop down to $28. And that volatility, that down pressure volatility is what makes people rich. The thing a lot of people seek to avoid is the one thing they need. Man, it's a lot like life. How cool is that? That's it, man. I appreciate you guys listening today. I didn't want to go too long. If I can help you, man, go to the website, man. If I can help you. Let's see. If I can help you, go to the website. And let me leave you with this. Money Flow Gang, you had some homework, man. You got to know the difference between an ETF and an ETN. If I ask you and you don't know, I'm going to block you. I don't care if you're even a paid up subscribed member. I'm blocking you because you didn't do your homework. I'm giving everybody ample time too. I don't want to hear no bull. Well, I've been busy at work. I don't want to hear that. You could do it on the toilet. You need to learn the difference between an ETF and an ETN. What is the difference? No excuses. I'm trying to make you rich, man. These are things rich people know. And so make sure you know, man, because I'm going to hit you up. I'm going to hit you up. I'm going to ask you. We got to start doing some homework, man. Appreciate you guys, man. Ooh, 39. You too. What's up, man?